Hello, fellow traders. This is TheRumpledOne coming to you Friday, July 15. The year's 2022. Let's talk trading. It's time for the weekly wrap up. As always, these videos are for educational purposes only. Your results may differ from mine. So, taking a quick look at the weekly chart, you can see we're almost there, 140 pips below the weekly open. 175 off the high and 102 off the low, and all of the gaps have filled. For the pound, we are outside of the opening range for the week by 5 pips at the moment, and we are outside the opening range for the month by 114 pips. So we are definitely down. But for the day, we're 40 pips above the open. In fact, trading that daily crossover was profitable a few times earlier today. For the year, 1,670 pips below the yearly open. So far, the seasonality indicator hasn't been of much help. Inside bar action, the last one inside bar was 9 days ago, and on the weekly 3 weeks ago. And we are well below those inside bar area ranges here, well below it, 228 pips. But we have a chance of making an inside bar today, so we might have some new action come next week. The range, only 66 pips today, and we've already had 2 red news events, but not enough to really move the pound. Overall, we have 6 pairs over 100. Just not a big day of movement. People must be taking early vacation. As I mentioned earlier, you can see here these past couple of hours, there was nice trades crisscrossing the daily open. And just this hour, you see we launched through the buy zone here. We came out of in the launch pad of the 40 right here. You see we crossed that line. We ran all the way up to 60, so there was an opportunity to grab 20 pips. And you can see right here the green rats have been feasting, the red rats have been feasting. Bambino flex indicator indicated a short. Near the pivot was just short, and you can see here the first time and a couple other times it did pay off short, but you had to take your money off the table before the market took it back. Okay, for the monthly, we're below the pivot. For the weekly, we did take out the pivot. And for the daily, we took out today's pivot, but yesterday we had a missed pivot at 1894. In and out of the lower wick zone, you can see here all to the upside, but we didn't quite hit that upper. The range this week, 277 pips. You can see that's only at the 33 percentile for the past 12 weeks. The ATR is 300, so for the past 2 weeks, we've been below the ATR. High minus previous high, we did not break out, but the low, previous low minus low, we broke out for 116 pips. Currently, let's see, what was I looking at here? So previous low, we broke out. We are 102 pips off of that low. But open minus low, you see there was 244, so trading that weekly open crossover there. And going the other way, there was right now high minus opens 33 pips. So there's money to be made going long. And the high minus to close for you rats 174 pips for you red rats, that is. Money to be made. Walmart traders, the right there, the 30 was good for right now over 30 pips. And I know a lot of people go, well, this is hindsight. But the thing is, we do it every day. So we do it in real time. And, we've been talking about fear this week. And one of the things I just want to kind of end it that week with, or the topic about fear so far, we can always revisit it later. But as they say, in the lottery, you have to play to win. You have to be in it to win it. So to get these 30 pips, you've got to take that trade. But you might be afraid to take that trade because you might be thinking, well, what if I lose? Well, what if you lose? I mean, what does that mean to you? So you lose a trade. What's the big deal? I mean, if you set your stop loss at a place you're in a position where that you're comfortable losing, if you're comfortable losing, $10 or 10 pips or $100 or whatever it is you're comfortable with, that's what you should be trading. And so you should put this trade on and say, you know what? I might lose. And if I lose, that's okay. And then let it go and see what happens. Now, of course, we've had news, and this is what's spiking at these past couple of hours. But even before then, the same thing applies. You either are in the game, you're either trading or you're not. So if you're not trading, then you can't lose, but then again, you can't win either because you have to be in it to win it. And some of these things might sound trite, but there's a lot of truth to them. And when you look at the Walmart method, I mean, you got to remember price is going to open between two of these lines unless it opens right on the line, which it does on occasion. Opens really close to it, like right here. There's a really close open to the line. There's another one really close. But the thing is, the worst case scenario is you're going to lose, what, 10 pips? Stop loss at the other side. I mean, you have to be in it to win it. And we look at these ranges here. I mean, look at this over the past, let's see, it's 7:37 my time. So that means so 7, 6, 5, 4. So from the usually I'm either start trading here somewhere around 4 or 5. But look at those ranges. It would be really easy just to take those Walmart trades, sit back, and either win or lose. I mean, right here, we just had a 3-pip break across that 70 line. You saw the alert come up, it hit the previous H1 high. It's either going to break it or it's not. And, for some of you, 2 or 3 pips might not be a big deal, but as I always like to tease Walmart, he's out there stacking bricks, Each one of those bricks is, a nice amount of money. So he only needs a couple of pips. Most of the time I'm only looking to make a couple of pips. It doesn't matter if I've got a trade on for a micro lot, a mini lot, a lot, 5 lots, 10 lots. I'm usually still taking the same trade. And if you wonder why would you trade 10 lots at one time and a mini lot at the other? Well, it depends on what method I'm using, what time of day, if I'm testing something. Because in fact, I got in a conversation with Walmart the other day, and he says, well, you switch broker, that's like doing this, and you should trade demo. I go, no, it's to me it's not really that big of a difference, and I want to have skin in the game. I want to otherwise I'm not really trading. I'm not going to have the exact same emotions. And sometimes I actually trade harder in demo, especially if I've got a crowd or, people standing over my shoulder watching when I have, quote unquote, I've got something to prove or something to show them. So I can actually trade harder. But just for me sitting here by myself, I got to have skin in the game. I don't care if it's a dime a pip or $100 a pip. Got to have some skin in the game so I'm engaged. I am at risk. I am risking something when I trade. Otherwise, just with play money, I'm not risking anything. And it doesn't matter what you say. There's emotions behind it because I hate to lose. I hate to lose $1. I hate to lose 100. I hate to lose 1,000. So I've got to get in. I've got to be engaged, and I've got to be, got to be in it to win it. And so right there, I think we had an opportunity to take about 3 pips on that high break. And it only gave you a short amount, small amount of time. So you have to be happy. You can't be thinking, well, I want it to go to 80. Well, the thing is, it's already run 49 pips in an hour. I mean, yeah, last hour it was 57, but that's all off of news. So, the main thing is that you set up your trade so you don't lose more than you're willing to lose. I mean, I repeat that often because I guess some people need that reminder or they need to hear it over and over and over again until something clicks where they really understand it and they go, okay, now I can trade. I don't have to, have my heart pound out on my chest right before I click the mouse because I'm so afraid. It's like, because you pretty much know one of the things that could happen, which is you could lose money on the trade. You get stopped out. That could happen. And that's it. But on the other hand, what you don't know is how much of an opportunity and for how long the market's going to give you a chance to take that profit off the table. If you're a rat, to grab that cheese and run away with it before you get caught in the trap, right? So here, if you went long at 70 thinking, oh, maybe it'll hit 75, so I'll put a 5 pip TP on it. Well, guess what? It didn't hit there. It got to 73.9, and it's like you could have had 3 pips. Now you're down 3-4 pips. So you have to decide, do you want to take what the market gives you, or do you want to make it a gamble? Or, okay, I'll go long at 70 and I'll take profit at 80 and I'll stop loss at 60 and I'll just place my bet and I will see what happens. And then that way, you don't have to live and die with each tick. You can walk away and come back later, see if your trade's still open or if it closed. But you kind of have to decide what it is you really want to do here. If you really want to live and die on each tick, or you just want to, turn your trades into bets, into gambling, where you put that trade on, you set the TP, you set your stop loss, and you walk away and see what if the market smiles upon you or not. So right now it's smiling upon you with 1 pip. Well, it was 1 pip. So you could get out of that trade or maybe you ride it. It's up to you. I can't tell you which way to do it. So I really hope that helps you traders. So let's see, before I run out of time, we've got 471 range this month. So far, oh no, that's the ATR, I'm sorry. Range by month. We've got 419. So we're under the ATR still. And year-to-date accumulated range, we're up to 1989. So almost 2,000 pips range for the year so far. So, fellow traders, I hope you had a profitable week. I hope you learned something and maybe something that Walter and I mentioned helped you. And I hope you have a fun and safe weekend. And when you come back to your trading terminal, always remember, never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.